What's up, guys? In today's episode, we cover the recent events with FTX and Binance. We discuss how FTX got to the point it is today, the state of crypto regulation, and why we have strayed from the fundamentals of early crypto. We are here with ItsBen.
Yeah, good to be back, guys, for the fourth episode. I'm looking forward to this conversation.
Yes, we've been balling. There's been a lot going on right now, honestly. It's been a busy past couple weeks. I mean, Bitcoin's down to like 16K. It touched, I think, at this low, and it's not for no reason. I mean, there's clearly some confusion.
Something bigger going on.
Something bigger going on in the markets. And people always are talking about, like, okay, like crypto, well, there's no price movement, but there is price movement, and it's news. And there's been some big like news that has come out the past week. So I guess for anyone that doesn't know, what is FTX, and like what is it basically?
Yeah, I think it's important to kind of start from like sort of the beginning, because FTX, like for instance, Coinbase was around for a while, right? Brian Armstrong was building it. FTX came out of nowhere. I mean, they're only like what 8 years old or something. I don't know exactly how old, but they grew so rapidly. Like it was insane. They went from nothing to the second largest exchange in the world in like a matter of years, because their marketing campaign was so just egregious, and they were pushing so hard on all fronts, and they just grew so quickly. It was almost like impressive. And SBF was kind of making himself. SBF is the CEO, was the CEO of FTX, and he kind of made himself the face of the industry. He was in DC talking to lawmakers and things like that, and then all of a sudden, like, what happened?
Yeah. So I mean, it's also important to note that alongside FTX, Sam was developing this fund arbitrage company called Alameda, which what they would do is they would take money and trade it, whereas what FTX would do is they would let clients trade their money on the platform and keep their money safe, right? So those two are not exactly parallel, which in hindsight could have been a red flag. But what basically happened is a while down the road, FTX made this token called FTT, which they used to facilitate transactions, pay users. Users could use it to pay for transactions. It's not an uncommon thing. A lot of other exchanges have a token similar to that. But the problem is that obviously, as you can imagine, such a token is not super liquid in just in its tokenomics. So when they started lending money out to people and securing those loans against FTT, where people would use FTT as collateral, what would happen is if I took a $10 billion FTT loan and I got margin called, right? That $10 million FTT, that would get sold on the market, which would drive price down a little bit, which would cause other people to get margin called, and you had the risk of ending up with a chain reaction like this, where a big margin call would cause a spiral, a chain of events of a ton of other margin calls, right? So because FTX was loaning its money out to Alameda and Three Arrows Capital, another sort of similar firm that was obviously taking on pretty big risks trading crypto, and they were taking out loans that were secured by FTT. What ended up happening is, inevitably, when those loans got margin called, it caused a sort of a death spiral that resulted in FTX basically just losing a large number of its funds.
It's kind of like a recap of like 2008, but on a much smaller scale, right?
Honestly, not that much smaller. I mean,
right, true.
You look at the numbers, and FTX had more client money than the Lehman Brothers. $8 billion.
I think something even funnier was they showed in the hype of the crypto market, like earlier this year, and like last year, Sam Bankman-Fried's net worth was like $97 billion. Right now it's like $1. Like I saw, or under $1 billion. He's like nothing, right? He just declared them bankrupt. He's gonna go to jail. If not, then something seriously wrong if he doesn't end up in jail.
Yeah.
But I think one of the craziest parts about this is, so it all started really because when FTX was growing, Binance, which is the biggest exchange in the world, most used chain in the world, they're enormous, right? Binance invested early into FTX, and then when FTX kind of grew so quickly and became a competitor of them, FTX was like, okay, we're gonna sell our position, but in return they're gonna give us $2 billion of FTT tokens. So CZ announces on Twitter on Sunday, I think it was. He says, we've been like disagreements or something like that. He basically put out an excuse to say, I'm going to dump $2 billion worth of FTT tokens, right? And obviously anyone holding FTT sees this and is like, oh, okay, I don't want FTT. I need to sell this before he tanks it. So it essentially started a bank run, right? Everyone's selling FTT starts plummeting. And then all that other stuff kind of falls into place. People learn about, like I think it was CoinDesk leaked the Alameda balance sheet, and they say, wait a second, Alameda has like $7 billion in assets, and $3 billion of that is FTT, which is FTX's token. So they're essentially FTX is propped up by Alameda's balance sheet, which is like huge red flag. Like it's essentially a big Ponzi scheme. And then when it all starts unfolding, Binance, the CEO CZ, came out and said, FTX came to us and we're gonna acquire them in a non-binding agreement. We're gonna acquire FTX, which is just like it just took the whole industry by storm. It's like, oh my gosh, FTX is getting acquired by their largest competitor.
Yeah, I mean, firstly, that kind of showed people the scale of what was going on. You know, this wasn't just like some small thing that happens every day. This was a big deal, and while of course this deal would you could potentially save FTX clients because Binance is hopefully a lot more of a secure chain. It would mean that Binance would end up being the major, by far the biggest player in terms of acting as a custodian of clients' funds in the entire crypto space. So it would essentially go from a duopoly to a monopoly, which no one really wants, but people thought if that's what had to happen, then that's what had to happen. But then what happened is CZ, I guess what he said is he looked at FTX's balance sheets and he backed out of the deal. So again, now that showed people that things were really bad.
See, yeah, I look at that and I'm wondering, like, okay, obviously the FTX CEO is obviously at fault. I mean, he created a system that was flawed, and clearly it had a big flaw, and it messed up a lot of people and a lot of their money. But do you think that CZ will be involved? Like, do you think he'll be held accountable, or he'll be looked at differently because of like the influence that he had on like this playing out? Like, he literally basically said, okay, this platform is trash, and it caused a bunch of people to sell their assets, which caused them to go bankrupt. So like, what do you guys thoughts on that? How do you think like people are going to interpret that in the crypto space?
I think, in my view, assuming that this, because like at the end of the day, this could all just like have happened similarly, or CZ knew, because if you can think about it, he was an early investor in FTX. He had to have known to some extent, wait a second, there kind of some shady's going on here. Alameda's buying FTT, they're lending each other money, like, wait a second. So he might have known in the back of his head that if that's the case, this could have all been some elaborate scheme. He's thinking, wait, my number one competitor, I have $2 billion of equity in their token, which they have very low liquidity because their sister fund has almost the whole like $3 billion of supply of it. So if that's the case, and he did this all on purpose, then I think this would go down as like one of the most intensely strategic, genius plans of all time. Like, I think, wow, that would be so crazy.
Yeah, because to say that like he didn't, like you were saying, like to say that he wasn't even familiar with how the software was flawed, and then he like says all these things about it, and then obviously it's gonna go down if the biggest crypto CEO, the CEO of the biggest crypto exchange in the world, starts talking shit about this company, then obviously it's gonna happen. So I don't know. It's kind of sus to me to see like him even play that especially when they're competitors too.
Yeah.
But I'll see it'll be interesting how the trial plays out, if there is one. Is that what you're saying? You think there's gonna be one?
A trial against
SBF.
There will be a trial, like 100%. There are all over the world right now people, lawyers. I don't know legal terms, but stuff is being brought up against him, and he's gonna, if he doesn't end up in jail, something's wrong. Like, this is, at the end of the day, this is pure money laundering, right? Like securities fraud, whatever you want to call it. He literally had a sister company. He took customers' assets, lent them to his trading firm, and they traded with them. And now, seemingly, these customers might not get their asset funds back, right?
Yeah.
And like this is gonna set us back years. This is just terrible.
Yeah, I think that's a good point there. Like to bring up regulation and like how there's probably a lot of people like looking in from the outside. They don't really understand this situation. They're gonna look at crypto and be like, okay, why would I even invest in crypto? And I guess that goes back to our first point. Is like Bitcoin's down to what 20%. It's bounced around a little bit. I probably will keep going down further if I had guessed. Not a financial advisor, but that's the thing. It's like, okay, all these people are looking in from the outside, and like crypto regulation is going to get even more strict because of this. And the more flaws that come up through crypto, the more strict the SEC is going to be, and more strict like our government's going to be on the regulations and keeping track of all this money. And I think it's gonna speak a lot to the laws that come in the future and what happens. Definitely,
yeah. I mean, this is going to be a multi-year court process where all the creditors and account holders are going to start making claims. It's going to go on for there's $8 billion at stake here. It's going to go on for a long time. But I guess let's sort of pivot and talk about solutions like what's next here for the crypto space.
Okay, that's a good question.
Yeah.
I don't know. I think we try to the crypto space. It gets really not over exaggerated. They overcomplicate things, and they kind of need to simplify things to like base level like principles of what blockchain is all about. And the more you get people in, and the more minds you get in, you kind of come up with all these crazy ideas like what he did. I mean, maybe it was all a plan, and he did it for some underlying reason. But if he didn't, like, it's just there's so many brains going at it, and I feel like they get distracted from like the core values of Bitcoin and what blockchain technology is all about. Like the person we were talking with before the podcast, like the more you steer away from blockchain fundamentals, and our previous episode we talked about this too with Schuster, and it's like, okay, the more you steer away, the more complicated everything gets, and the less likely it's going to succeed. And like blockchain technology and Bitcoin, they're anti-fragile for a reason, and like we shouldn't move away from that, but we should stick with it and the fundamentals of it. So that's just something I think, like, if obviously none of us are developing anything ourselves, but anyone on a team, you should be trying to think like, okay, what can I build that's going to stick with the Bitcoin fundamentals? And if you're moving away from that and moving away from why this was all founded, then it's probably going to fail eventually. And that's just the way I see it. And I don't know what that specific solution is for all these protocols out there now, but I think moving forward, I guess that's definitely something that we need to be thinking about.
I think in terms of impact, like, we haven't quite seen how bad this can get, right? I can find the tweet, but I saw a tweet. It was Gainsey posted it, and he basically had put together something that showed all the assets that FTX or Alameda had exposure to, and this list, like, we can put it up on the screen, but this list is huge, right? They owned stakes in so many countries, and these aren't like small things, like Paradigm, like Near Protocol, like pretty much anything you can think of in the space, they had some sort of stake in. And all that money is just kind of evaporated. And people on Twitter like are kind of freaking out because they're seeing like various companies, protocols, whatever. They're essentially saying, yeah, the money's dried up because everyone's just freaking out. Everyone's pulling out money. And on the other side, if the customers of FTX don't get their funds back, which right now it's kind of up in the air, like maybe they do, maybe they don't. If they don't get their funds back, like, this is worst case scenario. Like, second biggest exchange in the world. CEO was in Congress trying to lobby for various regulations. Supposedly they were at least allowing him to be there, and then it turns out he's a total fraud. He's engaging in securities fraud, money laundering, whatever you want to call it. Like, this is literally worst case scenario for the space.
Yeah, it's not a good look. So just to give you some concrete ideas of numbers, so they have $8.8 billion of liabilities. So that's customers' money. They have $900 million worth of liquid assets. So that's dollars, I think Japanese yen, and stable coins. Then they have $2 billion of less liquid assets like Solana, Bitcoin, and then crypto ETFs. And then illiquid stuff would be FTX ventures. So private deals, private equity, stuff like that. And that, even if you include the illiquid deals as something that they can return to customers, that still leaves a $2.7 billion hole that has literally just evaporated.
Right, and you're big on macroeconomics, Ben. I know in our servers we've been in, you like to speak about them and whatnot. So I'm curious, like, what is your thought about how this is impacting or is relating to like the interest rates, and like how back in 2020, I mean, we've talked about this like multiple times on our podcast, how they literally just pumped money into the system, and now we're doing the complete opposite. And how does that relate to like this situation here?
Yeah. So it's actually a pretty similar parallel, because what we're seeing in crypto is a sort of reinvention of the TradFi, of the traditional finance wheel, right? So you can draw a similar parallel to interest rates. You can draw a similar parallel to people now asking on Twitter for exchanges to show proof of funds, or I think they're calling it proof of reserves, which that's already a thing, if you will, in traditional finance, right? So you have 6 bank governing bodies in finance. You have quarterly reports that banks have to make. They can't buy stocks. They can't buy ventures with clients' money, and they have to keep like 40% or something in either U.S. dollars or treasuries, something that they can withdraw like that if they need to, and so these problems have already been solved. But in crypto, it seems like people are a little bit more open to taking risks, because it's a lot more money focused, I want to say, than we would like it to be, and that's kind of where the problems are at right now.
Yeah, you mentioned risk, and I think it's funny in this scenario because from an outside view, for maybe someone that wasn't fully involved in crypto and was just getting in, FTX, there was no red flag really. You saw an exchange, they have their own arena. The dude was on the cover of the Fortune magazine.
Went to Stanford.
Yeah, and like nothing looks out of the ordinary. And then you find out like, wow, so all along, everything this guy was doing was wrong. He just like ruined the face of the industry, and like even for someone coming in, like they can't see that risk. They just see, okay, Bitcoin sounds cool. That sounds like the future. Let me buy some Bitcoin on FTX and keep it in there. Oh wait, my Bitcoin's gone. I'm done. I'm out. Never touching this again.
So I'm curious to hear your opinion on, obviously Celsius like had the big bankruptcy this year, Voyager went down, and now FTX. So have your perspectives changed at all about like the future of blockchain and crypto technology? Ben, I guess we'll start with you.
Yeah,
So,
I will say yes, they have. I used to see this as a sort of space that I thought could flourish to be something that could survive alongside fiat currencies, be an inflation hedge, et cetera, everything that we were told on YouTube and Twitter. Now I sort of see it as more of a technological tool, I guess, right? So now that I have some development experience, now that I have some employment experience in the field, I see that there are real use cases for blockchain technology. But is there a real use case for Ethereum as a currency or Bitcoin as a currency? Maybe not so much, right? So people are using them to trade, to make money and lose money. But the main game changer that I now see is the ability to use this distributed ledger system as a sort of like a foolproof way to like publicly store information and timestamp information.
Yeah, I think I 100% agree. I think that really, at the end of it, it boils down to what Kyle was saying earlier, where we've strayed away from the fundamentals of the technology to where now we're focusing on, trading firms trying to maximize profits, supporting their sister exchanges and getting into shady stuff, opposed to the underlying tools. But I guess my view on it is, sorry, what was your question?
It was just like, how has your perspective changed after seeing all these like exchanges going bankrupt and making all these mistakes?
Yeah, so my view of the Celsius Voyager debacle, I guess you could call it, was at the end of the day, Luna, anyone could look from the outside and see Luna and say, okay, an algo stablecoin, we know there's no proven way this works. This is a big risk to invest in this. No one was like, okay, we know this is trustworthy. Like anyone investing in it knew the risks. So at the end of the day, like that, at least you could justify why someone shouldn't have bought that. It was really hard to see this coming. Like in hindsight, maybe you see, oh, wait a second, they grew pretty fast, they're together, whatever. You could maybe connect some dots, but like this was hard to see, and like I said, it literally sets us back. It's so hard to justify. Like if we can't get past something like this, like we really need to just have a couple years of resetting almost, because if we like still have bad actors, and someone that can so quickly get into the ears of lawmakers just to be a total fraud, I think it just ruins any reputation of the space in general.
Yeah, I agree.
I mean, additionally to that, the fact that, today you have CZ, who is basically, at this point, he is the dictator of crypto. I guess you can really call him that. He can do whatever he wants. I'm pretty sure Binance is going to have like 60% or 70 or 80, maybe even 80% of client trading volume of all of crypto. And, that's now in the hands of one man. What if he's another Sam, right? That's unlikely, but that's something that I guess we need to keep in our heads, right? The days of like Cameron and Tyler Winklevoss, who co-started Gemini, and a bunch of other players in a even space that was truly decentralized are pretty much gone, right? So the second institutions and maximizing profitability got involved, as Sam said, were the times when that kind of sort of died out. And, as an industry, we just have to adapt to that and accept it.
Right. And you touched on something that I'm curious about. You said, like, we have to stick more to, like, the utility of blockchain and, like, understand what the tool is. So does that change your perspective on what Bitcoin is, since Bitcoin really, some people would argue that it doesn't really have any utility and it's more of a store of value? So, or how does that change your perspective on Bitcoin, if it does at all?
Yeah, I mean, in all the Discord servers we're in, when people always ask me, oh, is this a good time to buy Bitcoin? Is this a good time to buy Ethereum? I always say I'm bullish on the tech, but the price moves are very, very much arbitrary, right? So there's no way for me to tell you if there's going to be $1 billion of inflow into Bitcoin tomorrow, right? There's just no way to predict that. What I can tell you is, Ethereum is doing XYZ to follow its roadmap. This technology is becoming more decentralized. The technology, again, not the space, but the technology. And, it's making these strides to do cryptography in a more efficient way, right? So as far as the technology goes, there are absolute fundamentals there that you can look at. But as far as price goes, it's at this point it's just a game of like a stock, really. There's no way to predict these movements over time.
So you don't think Bitcoin has gotten like less of a reputation after all this happening? Because like you said, like how it correlates with like fiat, and you said there won't be that big correlation, but I feel like Bitcoin is that correlation between fiat and crypto, right?
Interesting. I mean, I can definitely see that perspective, but I mean, the technology 100% hasn't changed. Maybe people's view of it as a hedge to inflation has changed. I would argue that it has, right? So back in between 2008 and 2014, it 100% was like a safe haven for people's money. But now, I mean, it really is just something people buy in a hope of selling for more than they bought it for in a year or two, right?
I think 100%, like reputation-wise, the whole space, anything related to crypto has been tarnished. And it might take, who knows how long it'll take for like the trust to be regained, I guess you could put it. But my short and simple view of this is, if you stay true to the values of crypto, which as it pertains to exchanges is not your keys, not your crypto, you would have been unaffected. Do not hold your coins on an exchange, and this won't happen to you. Like, we know if you hold your coins on an exchange, they're subject to all sorts of things because they're not your coins. They're just an IOU of coins that you supposedly bought. So keep your coins on a cold wallet, even like a hot wallet. Just don't keep them on an exchange.
Yeah, I think
and that's a simple fix to that.
I think for the people that are actually educated about what the technology is, it kind of emphasizes why it's so important. Because like this was an example of a move away from decentralization. But if there was actually complete decentralization in FTX, this wouldn't have happened, because there was all that behind the scenes stuff where, okay, this person wanted to do this and he controls all of this in the exchanges, and that's what the problem is with today's world and what Bitcoin and blockchain technology solves. So I think looking at all of this happening, it does really emphasize how important blockchain technology is. And if anything, me looking at this, I'm more bullish long term than I am before this, because obviously short term it's a game of up and down. We've seen this ever since Bitcoin was launched, or I haven't, but the space has seen it ever since Bitcoin was launched. It's an up and down game, and long term, more things are just going to keep pushing towards this decentralization and anti-authoritarian society.
Yeah, and I think that's one of the strongest narratives coming out of this is, look, another CeFi exchange just blew up. Once again, DeFi still running, still very, very good protocols in the DeFi space that are totally trustworthy and very, very good alternatives. And like, if you really just look at it from that perspective, I mean, bullish, yeah, I guess.
Yeah.
Yeah, definitely. Definitely. So I guess we can sort of pivot now to talk about all the stuff that's been going on with what the bigger players have been saying about this, right? So we have Martin Shkreli making some bold claims about SBF, saying that he's gonna spend a lifetime in jail, right?
Yeah, I saw on the Kobe. If you guys don't know, I saw they like went live and they had like Do Kwon came on and
Wow.
and all that stuff, and Martin Shkreli was on, and he basically was like, "Yo, listen, like jail's not that bad though. It's okay," which was so funny because like he went to jail for securities fraud with I think it was something to do with pharmaceuticals, and obviously Do Kwon probably should be in jail sooner or later for the whole Luna fiasco.
Hopefully.
But I think another funny thing about this was SPF's his timeline of tweeting about this, right? So when people initially found out, like when the balance sheet of Alameda got leaked and everyone was like, something's really not right here. There was no word from FTX, from SPF, from anyone related to either of the two companies. And then I don't know when it was, but SPF basically came out and tweeted like we're fine. I think he said like we don't collateralize against customer assets, something along that, which has clearly been proven to be not true.
Yeah.
And then exactly 3 days later, I think it was, he says, today I filed FTX US, and Alameda for voluntary Chapter 11 bankruptcy proceedings. Which, I mean, It's a direct parallel to in May when Do Kwon tweets, "Steady lads, deploying more capital," and then the next day Luna drops like 80%, and it just went downhill from there.
It just shows you how people are just in it for their own bags, and they're gonna try to play their own narrative to benefit them for as long as they can until they really reach that point where it's like, oh crap, we messed up and we got to file for bankruptcy, and then it's just like, okay, let me admit all my wrongs. But people are gonna push that narrative until they don't have to.
Yeah, I mean, to give you some food for thought, I guess. The space, I think exactly a year ago, Bitcoin hit its all-time high of like $69,000. It was worth over $1 trillion, the space as a whole, right? Over 10 trillion?
I think it was like over 3 trillion.
Over 3 trillion.
And now we're under $1 trillion.
And now, basically, Binance tweeting that it's selling $500 million of FTT token caused an $8 billion exchange to collapse, which caused Bitcoin to lose 20% of its value in one day. Right, so that just shows you how leveraged the space is, and how there's such like a blatant lack of security here, which definitely needs to be fixed.
I think also tweeting when he originally came out and like surfaced after FTT like basically went to zero and everything kind of started to unfold. His first tweet in this thread is, "I'm sorry," right, and like. The whole thread, he just keeps saying, I'm sorry, and everyone's just like, dude, stop saying I'm sorry and just accept that you should be in jail, and you basically just single-handedly set us back 2 years in terms of the whole industry, just because you were selfish and stupid and you were just a fraud. Like, that's the only way to put it. It's just like so embarrassing to see him keep saying that.
Yeah, it's pretty funny, but I'm kind of confused why he's tweeting all this stuff out if like he has lawyers and he's like, okay, there's probably likely chance that you're going to be on a trial for this, so like
I think he's doing exactly what his lawyers tell him to do.
You think so? You think all this is a plan to try to like put him into a good spot in the trial?
Maybe not a plan, but I think 100% if he tweeted something and his lawyers were like, you can't be tweeting this, it would be down immediately. And furthermore, he is not submitting the tweet button without his lawyer saying, okay, everything in here looks good, because he is definitely freaking out, and anything he can do to, not say something that could incriminate him further he's going to be taking that step.
Yeah, it's pretty scary situation here.
Yeah,
I can't imagine even working for FTX and just like living through that.
Yeah, so I guess that kind of brings us into something that's been going on like yesterday and today. So because basically I think it was a large percentage of FTX's customer assets were backed by FTT, which essentially went to zero. Withdrawals were paused. So if you had funds on FTX, you can't take them out, which was like a big reason why people are freaking out, right? If you had money in there, you lost it essentially. And so I think it was last night or this morning, basically if you lived in the Bahamas and you had a KYC wallet, which means like you like prove your identity or whatever, you could start withdrawing. But everyone's like, wait a second, FTX is based in the Bahamas, so this basically only applies to all the FTX employees that are living in the Bahamas right now. So they're allowed to take out their assets, which I mean is pretty messed up, but I guess it sort of makes sense. He's like, okay, let me take care of my employees first, which is still like super messed up. And then today, actually, you saw, I think it was Ben sent this tweet, and it was basically showing how people who had these wallets and were able to withdraw from their accounts in FTX, people were like coming together like, hey, dude, I have millions of dollars on FTX. I need you to help me get this out, because these are the only people who are allowed to withdraw from FTX. So what they were doing is the wallet in the Bahamas, right? They would buy like an NFT for like $0, or if they already had an NFT, and then the person whose assets were stuck, they would go find the NFT, buy it with their entire account. So if you have $3 million in your account, they'd say Bahamas wallet has some of the names that like these are like nobody NFTs, and they would buy the wallet or the NFT for their entire $3 million balance. And then the dude gets $3 million into his wallet from the Bahamas, and he basically says, okay, I successfully got your money out. And then he sends him, he takes a cut obviously, and then he sends the guy like $2.8 million, and he's like, there you go, you got your money out. Which honestly it's pretty smart. And there was a tweet, I think Kobe was the one who tweeted this, and he basically replied to it, and he was like, wow, like who would have guessed? This is the first proven utility of NFTs, and he like ratioed himself. It was so funny. But like that's so funny to see that happen. Yeah,
it shows you, like I was saying, like you're even more bullish on this because you can figure out ways to use like blockchain technology even to escape from stuff that happens like this. It's kind of crazy.
I don't know if I'd put it that way, because like by definition, exactly what I just described is money laundering. Like there's a good chance these people will have to return their money, because like it's a pure definition of money laundering.
True. Wait, so you think?
And I think it kind of paints a bad picture. It's like, hey, all these customers have their funds frozen, but if you do this money laundering technique, you can get your funds out while everyone else still has their funds stuck.
Wait, so why did it only work in the Bahamas?
Because so they allowed withdrawals for the people in the Bahamas, because that was letting the employees take their money out.
Okay.
So basically, if you work at FTX and you're like, oh, they're letting me withdraw my money, and you say, hey, I'm allowed to withdraw my money. If you guys do this little strategy, I'll help you get your money out, and I'll take a little cut.
Shoot.
I think that's my understanding of what's going on right here.
Shoot, maybe it was all a plan. Who knows? I don't know.
I think so. There were a lot of memes circulating after this on Twitter, and the funniest one I saw, someone had taken the picture of Elon Musk walking into Twitter headquarters with the sink, and they put Alameda Research over the Twitter logo, and they put CZ's face over Elon Musk. That was the best one I saw.
Yeah. Pretty crazy scenario.
Yeah.
Y'all have anything else to add about the scenario? Anything worth mentioning about crypto in general?
I think as a result of this, U.S. is just going to go headfirst into how do we regulate this space to death. Like, this is a really bad scenario, and any regulatory proceedings they had going just got catapulted forward.
Yeah.
Hopefully it's for the better, honestly. I'm optimistic about that.
Yeah.
I think that if we can get a systematic way of these exchanges to prove and like comply with regulations to keep client funds secure, that in the end that'll be a good thing for the space, honestly.
Yeah, definitely think will be beneficial, because like for instance, Kevin O'Leary gave a speech, and his entire premise was essentially, look, regulation is coming. After regulation comes, there's so many institutions and industries that are just waiting, saying, wait, as soon as there's some regulatory clarity in this space, I will put money into it. But they're just waiting on that. So, it's going to be a rocky road. I'm sure it won't be pretty, but once that regulation gets here, it's a big step forward for sure.
Yeah, I'm excited to see how it plays out.
I mean, if we are finishing up here, we do always end with our final question. And although it's Ben's 4th appearance on the show, we have to ask you for your 4th goal that you have in your career, personal life, and what actions you're taking to achieve it.
Yeah, I mean, right now, honestly, it's to actually blend my career and my personal life together, because I'm doing a lot of stuff in crypto right now, and I'm taking a lot of classes from school, and obviously I go to UNC, so I'm preoccupied with games and evening activities. So I guess finding a way for me to manifest my success in those three things and put them all together and make it all work is honestly what I'm striving for right now. I'm excited for winter break that's coming up. That'll honestly help me catch up on my work a lot. But yeah, I mean, it was great to chat with you guys.
Yeah, it was great. One question, we were together. So I'm curious, have you started reading it? How far are you along, and what do you think about it? Because it is kind of a relevant topic. And then, do you have any other books or like resources you came across recently that you really think would be useful?
And what was the name of the book?
Well, yeah.
It was Google something, right?
Life Before Google.
Life Before Google.
Or After Google.
Life After Google. That sounds right. After Google. That sounds right. I have not read it.
Way to drop the ball, man.
But I have actually started reading Atomic Habits. Long overdue, but it's a great book. And honestly, a lot of the stuff in that book it honestly makes you feel better about yourself, right? So the objective best way to stop doing something bad is not to drop it overnight. The objective best way is to do it, 1% less every day, I think is what he says, until it becomes a habit to not do the bad thing anymore, right? And I've definitely been applying that to my life a lot, in more ways than I can name. Doing one of my biggest problems right now is that I wake up pretty early, but I'm on my phone in bed for like an hour. So what I try to do is I try to be on my phone for 1 minute less.
That's and then in 100 days or 60 days,
60 days, I'll be done. Exactly.
You'll be done, and then you'll be looking back at it and be like, "Oh, dang! I really sat in my bed for an hour on my phone, and now I'm getting up right when I wake up."
Exactly.
Another, just on that alarm topic and just like waking up on your phone, I've heard a really good thing to do, and something that I've been looking for. I mean, I really have no excuse not to go buy an alarm clock and set it beside my bed and not use my phone to wake up, but it's just using an actual alarm clock to wake up instead of your phone. And then you have these tasks already laid out, and you're not going to be set to go straight to your phone, whether it's you're on your laptop doing something productive on your laptop or doing something productive like with your body, doing chores or something. That's a good way to try to just get up and be productive when you first start the day.
What I do is I like plug in my phone like way far away, and then the alarm goes off, I get up, I turn it off, but like at that point it's difficult, right? And that's what he talks about in the book, is make bad habits difficult. It's like difficult to, you're not gonna grab your phone and go get back into bed. I mean, you could, but like eventually it's just like it gets easier to do that and go start your day. Right. But on the topic of like handoffs, I guess I wanted to touch on some podcasts, because like given that this is a crypto oriented episode, I think podcasts have been like so helpful to me, in addition to Twitter threads, to really understand the situation. And I'm gonna give my top 3 crypto podcasts. Obviously, Manifest Your Success, obviously number 1, but we're not gonna count that because it's so far ahead.
It's number 0.
Yeah. So number 1, Empire with Jason Yanowitz and Santiago. Number 2, probably Unchained with I forget her name, but great podcast. Those are like, I mean, this kind of sounds, I guess, I don't know the word, but those are like 2 of the 3 biggest podcasts, so it's not even that special. Then like my favorite one recently has been Not Investment Advice, which is with like Jack Butcher and a couple other guys from crypto Twitter who were like crazy successful and smart, but like I feel like their podcast has gone kind of under the radar, but it's also like really funny. And those are kind of the ones I look for, where it's not just like blah 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 blah. I mean, like it's good to listen to some of those, but every once in a while I need one that's like kind of entertaining, So that's my 2 cents on podcasts.
I'll add a fourth one. Non-Refundable Network is a great one. I've been working with them for some time now. And then their child podcasts, Canucks Corner, Crier's Corner, Old Dog New Tricks. They have a ton of good stuff. It's made by some really talented guys. Definitely check them out. I guess we'll link all this stuff in the description for you guys. But I mean, yeah, our goal is just to provide you with the best resources that we can. So, Kyle, do you have anything?
Make sure you do your own research and do your own financial advice, especially in the field of crypto. This is financial advice.
Or legal advice.
But do your own research. I'm bullish on crypto to wrap it up.
And I hope anyone affected is safe and has a good exit.
That's why you always 3 to 6 months of savings in your bank account. Don't invest what you can't lose. It's that simple. Thanks for being here, Ben.
Yeah, thank you guys.
That's it for today's episode. We hope you enjoyed the conversation and would greatly appreciate a review to help others find the show. If you know someone that might find use out of our podcast, be sure to send it their way. We release new episodes every Tuesday, so hit that follow and subscribe button to stay up to date. Catch you next week.